When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip is back here from Blue Reef Ag Marketing out in Morton, Illinois, and nice to come on and talk about what's happening in the marketplace. Chip, how you doing, bud?
Doing well. Trying to stay cool here, Casey. We've had some heat here that we haven't had since that drought in 2012. It's supposed to be 102 here today. That might be nothing for you out in Nebraska, but that's getting cranked up here in Illinois.
You know, I'll tell you what, this is the first week we've had temperatures in the high 90s, low 100s all summer long. So we've had a very cool, wet summer, way out of the ordinary for us, but it's been I'll take it. But it's a pleasant change to have some bright, sunny sun and some warmth out there compared to what it's been.
It's definitely warm here. I will give you that.
Yeah. So speaking of weather, right? So we look at what's going on in the weather patterns right now. We take a look at some geopolitical stuff happening with what Russia's doing, more or less weaponizing the food infrastructure over there in Ukraine to where they can't get anything out. We had a huge run after the report came out last week, dove off, came right back up. We had a couple more days of pretty good runs up, and then we kind of had some 25, 50-cent runs. And then this rest of this week here, since about Tuesday, we've given it all back. So I guess looking at what's going on, was this a little bit of an overreaction? Now we're going back to correction, and we're going to see some more of this kind of hyper volatility throughout the rest of the growing season?
I think we are. I think this is just par for the course in here. And you hit the nail on the head. There's two things. There's weather and there's Ukraine. And the weather, this is pretty well publicized, this heat that we're having right now. We've been talking about this for 10 days. So this is pretty well dialed into, where we've been trading. Now, the question becomes, as we turn the calendar next week into August, is this heat going to stick around? Are we going to have, warmer and drier than average conditions? Because it still very much matters for final corn and bean yields, both. We got a lot of corn here that's, just finished pollinating in pretty good conditions, had some rain, had some fairly cool temperatures, but now we've got the mercury blowing up through the top of the thermometer here. Is that going to stick into August? There's some hints in the weather models that things moderate a little bit, maybe get back to normal temps, kind of mid 80s, maybe low 90s, and some better rain. I'm not so confident in these long-range weather models. They haven't been right for going on 18 months now, or very correct. They flip-flop on a daily basis, so you just kind of walking in another one of those weekends where what happens come Sunday night, Monday with those extended weather models are very much going to have a volatile influence on the markets. And then probably more so is this Russian-Ukraine situation. You hit the nail on the head. Russia pulls out of the Black Sea, grain corridor agreement. On top of that, they start bombing, infrastructure in Ukraine, ports and facilities. And then there was some talk that, well, that's okay. Ukraine can rail and truck and ship via river into out the west part of Ukraine into Europe. No problems. We can get all our grain exported out through Europe. Well, then Russia started bombing the Danube River ports and facilities. And so you had some massive swings in wheat. Untold volatility. At one point, we were limit up this week, earlier this week, and then 2 days later, we didn't quite trade limit down, but we were 55 plus lower at one point, and so we're going to end up the week here almost 70 cents, maybe a touch more off of the week's highs in wheat, still above the lows from the previous week. So even though the daily rangers are swinging 30, 40, 50 cents in here, we're still in an uptrend in wheat. The funds are still short. The market maybe is kind of breathing an all clear almost, and I'm not so sure it's reading it right. I think this might be take a longer time frame to kind of figure out what really can we expect Ukraine to export. And then, of course, Putin's, tooting his own horn out there, meeting with some leaders in Africa saying, we're going to give you free grain. Don't worry about Ukraine. We're going to give you free grain. As you read between the lines, he's talking about 50,000 to 100,000 tons. So inconsequential in the big picture, but it sounds good on the headlines. And I think more than anything, that's kind of what took us off our highs is kind of the headlines this week. And it did appear that Russia kind of slowed the bombing down of, ports. But then here just yet today, you had a story out that maybe Ukraine did a counterattack and was blowing up some Russian controlled ports along the Black Sea. And that swung wheat 25 cents off of its earlier lows. And then we sold off 20 cents from there. So it's just, traders are weary right now, myself included. What's the next headline? What's the next 30, 40, 50 cent swing in wheat, in corn, in beans? And I think we're just getting started. I don't think we're at the end of it. I think we're just getting started with this volatility.
Yep. Have you heard anything? Because I've read some headlines and I've heard a couple of people bring it up. And I talked to Sean Hackett earlier this week. You talked about it too. But Europe closing off land transport of grain out of Ukraine because of what it's doing to their local markets.
Well, I haven't heard that this week. A couple weeks back, there was some talk, particularly in Poland, that Russia, or I should say Ukraine, putting out some of those exports or exporting out of Ukraine into Western Europe, and Poland in particular, was depressing their local grain prices. So, their farmers there saying, hey, Ukraine's dumping their grain. We don't really need that extra supply necessarily right now. And it was affecting local grain prices in different areas of Western Europe. And there was a little bit of pushback on that. So I didn't hear a lot of that this week. There were so many headlines. It doesn't mean that wasn't out, but there's just so many moving parts. It's unfathomable how many moving parts there are. And it's not just wheat, it's corn. Ukraine is a massive provider of soy oil. Well, we've tightened this world vegetable oil market up. And if soy oil's, not going to, as readily move into the marketplace there in that Black Sea area in Europe, that kind of changes the name of the game in the world vegetable oil trade. So, it has long ranging and reaching tentacles here as to what transpires going forward. And it just seems like on a daily and weekly basis, it deteriorates. And, on top of it, I think the market kind of forgot that, we're going into the second growing season of this war for Ukraine. They cut last year their acreage back by 50% of normal. I believe it got cut even more dramatically this year. So at a certain point, their production is going to be small enough that there's going to be less and less, to talk about even exporting out of Ukraine because their planted acreage is down so much, and lack of access to fuel, lack of access to some different inputs, and so it's a disaster over there. And I'm not sure the market is quite reading it just right yet. Price is the winner. You can't fight price, but I'm not so sure we've heard the end of this, and I'm not so sure that you've seen the high in the wheat market just yet, especially if it looks like that Black Sea or Ukraine, agricultural exports are going to be hurt as much as what it appears it could be going forward.
Yep. All right, so let's talk about the weather side of this market. When you're looking to see what's happening there, you've got this high heat during peak corn pollination. That heat's supposed to carry over into not so much the first week of August, but kind of depending on where you're at, kind of hang around a little bit. But that second week of August, they're really looking at some pretty heavy heat coming back into play. So that would be peak pod setting time during soybean production. So I guess looking at this weather model and the weather models you're looking at in the areas that we're in, I know you were really dry, got some good rain, and now it's hot and dry again, and it's pretty. I don't know how much of that's stuck around, if it's turning dry again on you, but looking at the key corn and soybean belts based around the stuff that we have in play right now, it kind of looks like we could be headed towards maybe a tougher end of this harvest than what we thought.
Yeah, and that I think still matters. I don't think the market's ready to make a final determination yet. It's trading here on Friday, kind of like it expects August to be pretty normal with some better rains. We aren't critical yet. I mean, we haven't had a real good rain for a while, a couple weeks in here. We've had a lot of heat this week. And so we're going to need some rain pretty quickly within the next week or 10 days. If we get it, I think things look really good given how dry we were in May and June. But if we're going to kind of flip back and we're going to really struggle here and only get a quarter or a half inch here and the heat comes back, we're going to struggle and probably take the top end off of this corn and bean yields going forward. So we're kind of right on that fence. It's hard to say, what that stress did in May and June. Some people think it did nothing and we still have full yield potential. That's hard for me to believe necessarily, although I'm not an agronomist. Nonetheless, the next 4 weeks in August really could tell the tale as to, take a bushel, 2 bushels, 3 bushels off a national average bean yields, or sustain it right in that 51.5, 52 range if we get cooler temperatures and rain. And, I know I've witnessed firsthand hot August in years past can take 15, 20 bushels out of the crop really quickly in a matter of 10 days, really. If you don't get the right temperature and rainfall in August during grain fill, it just decimates crops. So the next 4 weeks really going to tell the tale. I think it's way too early to say that we've got, these yields secured and in the bag yet, and still highly, highly dependent upon temperature and rainfall the next 4 weeks.
Yeah. Okay. All right. Last question. I'll let you get. I know you're up against the clock here, so I'll let you get on your way. But you look at the hog market right now. Hog market's had a pretty good week. They've had a week and a half or so. A lot of that's coming off the news that we saw coming out of California. Some of that panic buying that we see there kind of prop that up a little bit with the Prop 18 or whatever it is that's out there that they're trying to slow the transition of hogs into that aren't raised in a certain way back into California. So looking at that, you've seen some movement back in with China coming in and buying just a little bit, not a bunch, a little bit of hogs. They're slowly starting to make a turnaround, but hogs have seen, a little bit of a peak here, a little glimpse of the sun here for a minute. So I guess looking at the hog market, what are your thoughts?
Yeah. I think we're seeing the benefit of, a lot of demand out of California as they kind of fully implement this Proposition 12 deal. The leftists' dream, I guess. I don't know what you want to call it, but anyway, it did prop the cash market up in the cutout, and it's still pretty strong. I think that's what's supporting the front month. It's still, I think, I didn't check it today, but you're looking at the lean index that's trading 102, 103 range, and so that's holding the August lean hog futures up. The deferreds, the October and the December, feel like they want to break. Now, why I would qualify this is you look at a seasonal pattern over the last 40 years, and you're within 2 weeks, maybe, give or take, call it within the next 3 weeks for sure, of when we normally put a seasonal top in place. So if we do top the cash and cutout markets and see August and the lean index start trending lower, I think you could quickly see a lot of pressure on the at least October and December contracts. So, still remains to be seen how that's all going to shake out with this California deal, but it does look like they're serious. It is in law. It's been, upheld through the courts. And so as you go forward, I think it's still going to take some time to get the rest of our hog production compliant. And so what that might do is keep a little bit of demand that you normally would see out of California out of the market. And if it's the same time that we peak seasonally here in August, the cash top in hogs, it could get a little bit ugly out there. So I think producers need to really, keep a close eye, particularly on these third and fourth quarter hogs, which typically aren't very good. Historically, they're still at very good levels. So I think it should be front and center in producers' minds right now.
Right on. All right, Chip, appreciate you being on the podcast. If folks want to reach out to you, get more information about what you're doing over at Blue Reef, what's the best way to do that?
Yeah, best way is just call our office here in Morton, Illinois. It's 309-550-7213. We'd love to chat with you. We're not high pressure at all. Love to hear from you, right, wrong, or indifferent. If you think I said something crazy, which usually happens. We don't get the calls like, hey, I heard you and I agree with everything you said. It's usually people that say, you're crazy. You couldn't be more wrong. But either way, give us a call. We'd love to chat with you.
Right on. All right, Chip, appreciate you being on the podcast, man. We'll catch you next week.
All right. Thanks, Casey. Have a good weekend.
You too. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Go to the YouTube channel, Moving Iron Podcast, and check out everything on the Moving Iron website, which is movingironllc.com. So with that, I'm Casey Seymour with Chip Nellinger. Let's go some iron, folks. Wow.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving